Amit Khurana, who looks at all of these pockets very, very closely, head of equities at Dolat Capital, joins in to tell us what he thinks could the big picture potential impact be of a move or a proposal like this. Amit, not a move, a proposal. Neeraj here, good morning. Thanks for joining in. A proposal as yet, but you guys are big on the derivative space as well. What do you think is the potential impact if most, if not all, of these proposals get accepted and put into practice?
Yeah, hi. Thanks, Neeraj. I think there are two broader sort of philosophy points that one can put in. One, they are essentially targeting the weeklies and they are targeting the option segment. The second important part is essentially this is the starting point, which I believe is moving from sachetization of options market, the F&O market, towards institutionalizing it, wherein the regulator essentially has a philosophy, and rightly so, that the retail investors, having a limited understanding of the options market and the risks that they're taking, are being too exposed, and especially the post-COVID period, when it went through a significant boom led by technology infrastructure, enablers from the intermediaries like brokers, and whole lot of other social media, which led to a significant increase in the activity. I think it's about time that it is managed well and the risks are highlighted. The impact will obviously be that the weekly product will have a significant dent, and brokerages which are exposed to the retail side of the businesses will take a significant amount of impact on that. Obviously, exchanges will also have a lower fee, lower revenue, and so will the STT get impacted from the government perspective. All in all, I think the objective here is less from the revenue side of it, but more from the risk management and managing the systemic level issues which can essentially risk the entire system at any point of time. So might as well control it when things can be understood better rather than being as a reactive regulator.
Now, Amit, you guys have a significant exposure to the foreign insti trader using derivatives, presumably at your end too. How high was this volume on these multiple weekly segments available? And could it deter or could it be a dampener for an institutional participant as well if the number of weeklies are cut down?
Well, difficult to decipher as to how much will it impact, because most of the insti was more monthly rather than weekly.
Okay.
Weekly was a more a sachetized product for the retail segment because the capital outlay was relatively lower. Most of the insti and especially the FPI books or even the domestic R books move more on the monthly side. Liquidity impact, it's difficult to decipher right now because eventually as one leg gets impacted, there will be some impact, but whether it will lead to a significant increase in the spreads, I don't think so. They will eventually get normalized, but we have to see how it evolves.
Amit, hi, it's also Samina joining in. Help us break down a few more things, right? Let's start with the calendar spread. Now, what the regulator is trying to do is remove that arbitrage opportunity that was happening on expiry day. Do you feel this could have a significant impact in reducing volatility on those expiry days? Because you can still buy an option and sell an option, just not on the day, right? So how do you think this is going to impact a retail investor?
Precisely, and that essentially is aimed at increasing the capital outlay that any investor puts on the table, and a higher capital outlay will become a natural deterrent to those kind of activities. Earlier, it was much easier to do, and you do not have to put in very high level of margin. I understand these are two measures. One, it is not being allowed on the same day, and second, the margin outlays will also go up dramatically. And along with that, you will also have the higher lot sizes. So we are seeing measures being done on every front to make sure that there are enough deterrents. And only the sophisticated investors or investors who have a very significant level of capacity to understand the risks and absorb likely losses which may turn out from such trades are only participating in this market. So as I said earlier, the sachetization phase of the Indian option market is essentially getting over, and we are moving towards the more institutionalized, the sophisticated kind of investors who will possibly be able to make trades here.
Well, sure, this is of course a good the intent is very clearly there. Now, we can talk about, of course, what they've done in terms of increasing the margin, the notional value, but in principle, this is a recommendation. This is going to come with opposition from the exchanges and the brokerages. Do you feel like some of these or most of these recommendations will become regulatory in the next couple of months in terms of timelines? What are you anticipating, and how well will this be taken up by brokerages and exchanges?
Well, one of the lessons we've always learned being part of the market is you never fight with the regulator, and for the right reason. Okay. And I must also mention that we do not have any vested interest because we are not a retail brokerage house. We are an institute house. So from our perspective, it really does not impact our business, except that the liquidity impact will be there, and according to the volumes will adjust. But having said that, I think there will be a fair amount of discussion, and I think the regulator has been pretty constructive about the feedback that has been given by the stakeholders, including brokers and exchanges. But let us look at the big picture, which is that the market is taking too much of a risk. Some of the retail investors are taking too much of a risk, and we keep hearing those, stories and versions on social media and amongst our peer group that everybody seems to be trading in the market. I don't think that's a very healthy trend. We need an investing sort of a mindset amongst the populace. We need an investing sort of a mindset amongst the younger population. And therefore, the habits have to be changed accordingly through a nudge. I don't think this is beyond a nudge. It may look like a slap, but I think this is how the system needs to be managed proactively rather than reactively. So there will be a fair amount of discussions around this, and I think somewhere a middle path will be found. And ultimately, we have to accept that these regulations are going to come in.
I'm just wondering, Amit, good morning. What is the middle path between a nudge and a slap? Since those are the two ways that you described it. But just from your sense, and you talked about how the more evolved investor will be now left behind in this space, the sachet kind of investment will move on. What is the impact on volumes that you see? So, for example, if SEBI is saying that there were 92 lakh unique investors in 23-24, do you see that dipping significantly?
Well, that's something that we'll have to see. How much of that was doing pure, options trading, and there could be some number out of it. We'll have to see that. I don't want to speculate on that part right now. Let the regulations evolve. Let the education programs take care of so many other issues. And if that number has to dip short term, I don't think one should be too bothered about it, because ultimately it's a system which we've got to manage in a very, very risk-averse manner. Make sure that the longer-term trajectory of the investor growth, the returns that they make, is far more stable rather than just trying to make one-off here and there and losing 80%, 90% of the cases. Overall, I feel that there will be some realignments which will happen. The sophisticated investors who are serviced by the professional managers will probably.
Yes. Okay, I think we need to get that feed back up. We've lost that feed from Amit Khurana. But good perspective there, folks. And one clarity that seems to be coming in is that this is something that needs to be accepted. It's going to be something that you have to live with. And in fact, while we try and get Amit up, let's just listen in quickly to what SEBI chairperson Madhuri Puri Butch also said. She gave the rationale of the market regulator in introducing curbs on F&O.
If there is 50,000, 60,000 crores of losses by individual households in the F&O segment, what would you say to that? If 50, 60,000 crores in a year is going away from household saving into losses in F&O segment, whereas that could have been productively deployed as a part of maybe the next IPO round, maybe the mutual funds, maybe more productive uses for the economy, why would you say that that's not a macro issue? At 50, 60,000 crores, that's pretty macro according to me. This is not about some 200, 600 crores.
50, 60,000 crore rupees of household savings going into F&O trading, and that's really the concerns being put out. Amit Khurana back with us. Mr. Khurana, just one question from my end. What is the immediate kind of impact you see on market sentiment, considering that these are guidelines, or these are, proposals right now? Do you see any specific bucket of stocks perhaps being hit in the capital market space or exchanges?
Obviously, the guys who have an exposure to this kind of revenue stream will take the first knock. And I think the overall this expectation was very much there for the last so many months. So I think the market will eventually take that into stride, and especially.
Struggling with Amit's feed, but we'll try and connect back. But